Has the housing market really peaked? Stay right there. When I get back, we'll talk all about it.
You were talking about money, right?
Separate yourself widely from the pack. Moving forward, that's something that you would be willing to have a discussion. Hey guys, welcome back. I'm Mark Jones, your millennial mortgage expert, and this is Millennial Market Talk, where we go over news, mortgage updates, real estate, hot topics, and things of that nature. I wanted to go over a real quick recap because I'm hearing a lot of chatter still about a market crash coming or on the horizon. And I'm here to give you a bunch of data that shows otherwise. So if you're living in Texas, hopefully you get a little something out of it that you can share. If it is worthy, please make sure to like and subscribe. So as usual, let's start with our most recent updated interest rates. And as we can see here from the rates, I'm also using the Google tool that I normally do. And as you can see here, our 30-year fixed conventional is sitting already at a 6.182%. Now I've got this honed in at 300,000, 5% down in the state of Texas with a credit score of 680 to 699. For those of you above the 720 mark, let's bump that up. As you can see, it does pay to have a higher credit score, especially in times like this. Right now we're seeing heavy inflation, and I wanted to go over those numbers, but just before I do, let's finish up here. We've got FHA 30-year at a 5.6%, VA at 5.5%, and your USDA spiked up to 6.1%. So as you can see, guys, rates are still on the rise. I would advise you to lock in an interest rate as soon as possible. Maybe ask your lender about a lock and shop program or potentially an extended lock for those of you that are new construction and still building at the moment. So if you are interested in something like this and you are in the state of Texas, please visit us at LaCanteraLoans.com, which you'll see right down here, and we'll get you with a rate quote. Make sure to have all your documents ready so that we can provide you with excellent customer service. So let's continue here, and on this next piece, I wanted to show the rate of inflation and where it's currently sitting. So as you can see here, our market inflation is already sitting up at 8.5%. So as we hone in, you can see here that the last time that we were up at 8% or even close to that, I'm still scrolling, it's 2015, 2012, 2000, as you can see. In 2011, it was getting up to about 3.6%. And let's see here, 2005, goodness. And as you can see, guys, data does not lie. We have not had inflation this drastic or heavy in quite some time. So that is definitely playing a factor when you're dealing with your cost of goods, services, automobiles, gasoline, all the way to your electricity that you pay. So keep that stuff in mind as well. And I want to jump into a quick article just to kind of ease you guys and what you're seeing out there is probably crazy. You're hearing all kinds of panic about a crash, about real estate going to drop in value dramatically, and that's just not the case. So this article from Housing Wire basically asked the question, has the housing market really peaked? And the article goes on to say, it's not the time to sound the alarm, and there's no indication that another housing market crash circa 2008 is about to happen. But there are signs and signals everywhere suggesting that the decade-long boom in the home sales may be running out of steam. Demographics still point towards the market with strong demand. The largest cohort of millennials, the largest generation in the U.S. history, are between the ages of 29 and 32, and the average of first-time homebuyers is right around 33. And I want to quickly say that they are absolutely incorrect when they're quoting the demographic of millennials. Millennials are actually from 1996 all the way to 1982, which makes them a lot younger and a lot older than that. That's just giving you perspective. So it's basically saying that there are plenty of prospective home buyers coming to age. And 33 being the average age makes sense to a certain extent. I think that what's happening is we as millennials are waiting a little bit longer than what typical home buyers historically have waited to purchase a home. And the article goes on to say those people need somewhere to live, and their precious little rental inventory availability with apartments vacancies between 2 to 5%, depending upon where the numbers you believe. But in either case, being historically low and the low vacancies have caused rental rates to accelerate at an unprecedented pace, with asking prices soaring 17% year over year, according to the Real Page, making home ownership more economical in many markets across the country. But affordability of the lack thereof is one of the main factors suggested that the housing market bull run may be winding down. Median home prices rose by nearly 17% in 2021, according to the sales data collected by Adam. And to that, guys, I wanted to also show you a quick update or bulletin that Black Knight comes out with. So as you can see here, easy to obviously see that delinquency rates are down year over year by 15.5%. And foreclosure starts are down also 3%. That's some surprising data. Foreclosure starts remained relatively steady in March after a major dip in February. So despite what you're hearing about, there's going to be all of these foreclosures, you're going to have opportunities to purchase. Guys, I don't see that happening, especially in Texas. Let's go to the next chart here, and as we can see, and this is some pretty good information, the national delinquency rate of first liens, as you can see here from the chart, shows that we are at a 2.84% national delinquency rate, and that is again the lowest that we've seen ever. It was a record setting. So the 1 month change, as you can see here from 2022 versus the national, yes, there are some increased activity in regards to the delinquency rate, but this is also tied to the fact that there was a stop or a halt to mortgage foreclosures or evictions. And that was imposed by our US government in response to the COVID. So as we can see here nationally, just to kind of prove that point, you can see here, and I'll zoom in on this so you can see it a little bit clearer, but the total delinquencies is up right around 1.7 million, and that is historically, as you can see, one of the lowest times. It was right around 2020, right before the pandemic. They were actually at 4 million. So we are still way below what they're shouting and spouting out there. So definitely, guys, take these things into consideration when you're making your determination as to what is actually happening in our market, because as you can see, there's not really much fear that should be imposed because the data is showing otherwise. We have not seen a slowdown in the actual prices rising, or we have not seen a drastic increase in the amount of inventory that's on the market. And in order for any type of crash to occur, we've got to have well over the amount of demand. And typically that's about 6 to 7 months in inventory, and we're currently sitting at a national average of 2 months. It's actually 2.1 months of inventory. So we are well below the actual threshold that would indicate a crash or an overage of supply or a flip to a buyer's market. So guys, hold on tight. Grab your real estate as soon as you possibly can. Get with your mortgage professional to get all of your options. And also, a pro tip, don't pay points if you don't have to, especially in times like this. We predict that a recession will occur within the next 12 months. Now, keep in mind that's just an opinion, but based on the data and the research that we've done and I have done, I can pretty much say that a recession should probably be occurring within the next 12 months. And anytime there's a recession, we are in need of lower interest rates in order to reinvigorate the market to get that kind of jump start. So Since we're on a quick subject about real talks, I wanted to basically give you guys a little bit of perspective from all the junk that I'm seeing out there. There's plenty of YouTubers that have fantastic cameras and special effects and things of that nature, and they're using these data points and charts to sway some information. And in my opinion, a lot of the folks out there are simply waiting to scare folks out of purchasing so that they can scoop up different foreclosures, things of that nature. I really don't know what their angle is, but if you are in the state of Texas, definitely it is not a time to let off the gas. In my opinion, as you have seen in the past, a couple of videos that I made explaining exactly what's going on with our market here in Texas in regards to inventory and inflation, in addition to the rents that are rising continuously, and basically buying a home, regardless of interest rates being higher, is still more economic for you as a Texan. Know that, in my opinion, there's not going to be a crash in Texas. Matter of fact, we have not seen values go backwards in Texas in ever. So if you are moving to Texas or you are looking to relocate within Texas, if you're currently a homeowner and looking to get your options to see if you too can become an investor and start leveraging the property that you actually have earned and have paid for a while, maybe pulling some equity out of that property to leverage over to buy an investment property or second home. Because based on my theory, I believe that we are going to be hitting a recession, but this time the recession is not going to affect our real estate values. Now, that being said, if my prediction about a recession is going to be coming soon, I would imagine that it really doesn't matter what interest rate as long as you qualify, because rates will drop again, giving you the opportunity to refinance and capture a much lower rate, but currently capturing that home. A lot of folks are thinking that they will wait until interest rates come back down, but what you're not going to see, especially in Texas, is the property values going backwards. We've already seen the property tax values increase year over year. Luckily for us in Texas, we have a 10% homestead exemption cap on the value that it can increase year over year. So based on the data, based on everything that I've compiled, it's much more cost efficient for you as a potential home seeker to look towards buying versus renting, because the values are going to continue to rise, as will the rents. So you too can accomplish the American dream with a little bit of help and advice. So contact our team at LaCanteraLoans.com and get your options from an expert. Hope you got a little something from this video, guys. I'm Mark Jones, your millennial mortgage expert, and you guys make today count.
You were talking about money, right?
Separate yourself widely from the pack moving forward. That's something that you would be willing to have a discussion about.
Because they didn't get it.
They
were
probably
like, hey,
didn't get it. Yeah.
To follow up with your clients, to generate more leads. You know what I mean?